Selby, how are you, sir?
I am excellent, sir. Another week in lockdown paradise.
So good. Well, you can't complain. You look at the price of nickel. In fact, look at the price of copper. It's just going through the roof.
Yes, no. It's been, as I said last week, nickel was set to rip, and you're going to see it move 10%, nearly 10% in a week, get back up to $8 a pound.
Nailed it.
Actually, I wish I said that. We were stuck, in the bottom of the range that we had been, and again, based on what's there, it didn't look like there was much that was going to move it. Obviously, I'm not as good at this job as again, if I could call it, I would not be doing this as much as it's nice to talk to you every week. But
it's although you could say he who writes history defines history. So if you just said enough, you'll believe it. Maybe other people believe it too. But unfortunately for you, we've got recordings of all of this, so we know.
I know.
We know. But yeah, great week for nickel. Also not bad for copper.
Bounce up. Again, I think what you saw, across in terms of the whole reflation theme, global economy recovering. I think the bulls are starting to get their courage back again after the sort of sell off from the first run up in the beginning of February. One of the other things that I don't think we've talked about during these sessions is, one of the prime drivers, in terms of metals prices is just the US dollar index. When the US dollar is falling relative to other currencies, then the US dollar price of those commodities go up. Again, it's a pretty simple equation, but and it does have an impact. Like if you look back most, 10, 15 years ago, before China was a big thing, most macroeconomic commodity price forecasts were a function of IP growth, US dollar index, and I think just, one or two other factors. And literally that would explain 90% of whatever price movement had happened, in the past.
So what's happening there? Because obviously the US has seen a bit of growth in the first quarter under the new Biden administration. So how does all that link?
Well, where it's coming from is yes, the economic growth is outstanding. Again, I think that was partly helped the bulls get their courage back up to step in again at these levels. Grew at 6.4% in Q1. And the view is it's more Q2 and Q3 where we're really going to start to see things moving. And then the other big news this week was obviously the Biden State of the Union address, where with an economic fire starting to burn, he showed up with, about 6 different gas cans and is all ready to pour, several $1 trillion worth of gasoline on the fire to really get, U.S. economy moving and also sort of reshape it, a la Lyndon Johnson or FDR in terms of the scale and scope of some of the stuff he's doing. When that happened the same week that you had the U.S. Federal Reserve guy, you kind of say, oh, we're not really that worried about inflation at this point, it's that kind of dovishness that allows the currency traders to go, I'm okay. Maybe we are going to see a little inflation out of the U.S. here, so I'll back up into some other currencies that are maybe going to see less inflationary pressure over the next little while here. So.
But how do you think that? I mean, you're North American. We're sitting over here in Europe, and we kind of get a different flavor, I think, of what's going on over there. The reception to that State of the Union speech, to the discussion of, hey, $4 trillion being allocated to infrastructure projects. So coming in at grassroots, as it were, rather than being tax cuts to the large companies that we saw under Trump. I mean, what's the difference in terms of the way it's been received?
Well, the raging right is obviously raging about all this sort of the big reach by government into people's lives again, and all this deficit spending. Although again, the Republicans under Trump weren't so bad at deficit spending themselves. But I think so. You are seeing a broader base of support for things in terms of infrastructure spending. Again, I think in terms of expanding the safety net, I think the Democrats have realized part of the reason that the Donald Trumps of the world are able to do what they're doing successfully is that when there's a bunch of people who've been economically underprivileged for now getting on to a second generation and have seen nothing but public services eroded in terms of education and so forth that help get them out of poverty and not being offered any other alternative that's going to get them out of their plight. So, again, it makes it easy for a demagogue to come along and make up stories as to what the problem is and why he's just going to solve it with a wave of his magic wand and move on. So I think, this sort of broad base, help, for across a range of different dimensions is part of the Democrat plan to help win back those voters and bring them back into the Democratic fold.
I guess we better stay away from tax hikes for the rich and that sort of conversation, because that's incendiary. It's incendiary over here, and it's probably very incendiary over there. I can imagine the sorts of discussions.
But it's interesting. I mean, there's been a few billionaires who kind of come out and support and say, hey, yeah, we should, I'm okay with paying higher taxes if it means we get better infrastructure and better public services, which, are going to help make this a better country. So, we'll see how it goes. It's obviously the State of the Union is just a speech. It's basically, what is he able to get passed, through both houses of Congress. So, it'll be an interesting 6 months in terms of how that all unfolds. But no, it's been, again, he's, from our perspective, from a nickel perspective, the big focus on decarbonization and electrification is just, is a massive boost to the battery metals going forward here.
Well, that's what I mean, because that was sort of buried away in that. Well, there's a lot in there, but in terms of that, the kind of EV component, the trying to reduce carbon footprint and CO2 emissions, etc. I mean, they are really going after that in a big way, and that can only be good for battery metals such as nickel.
Yeah, and again, the other news, fundamental news this week, and I won't be talking about any company drilling results because there was a bunch of pretty interesting fundamental data about the broader market that I think will soak up our time here. But so the Nickel Study Group, put out their forecast. They do it twice a year in April and October. And again, it's a group of countries that are part of this study group, and they have government representatives there plus some industry reps. And again, it's a bit of a consensus thing, and generally consensus, never gets it particularly right. But what's interesting is, despite that sort of consensus, approach that they have to use, they had nickel demand forecast up 12% in 2021. Remember, I said at the beginning of the year that I think nickel demand is going to be 10 to 15% a year, and probably closer to the upper end of that range than the lower end of that range. And again, most industry analysts, have single-digit forecasts, which are tough to follow. The other part is on the supply side. They also saw supply increasing by 230,000 tons to 2.72. So they had a surplus for the year of about 50,000 tons. But the kind of bullish undertone there is the one thing with their supply forecast, where every analyst has a disruption allowance that says, okay, I'm not going to pick on any one producer who I think is going to undershoot, but I have a percentage that I sort of take off the total number because I know someone is not going to quite get there this year. So they don't have that in place. So at a 2 to 3% disruption factor, they're forecasting a deficit for the balance of the year.
Interesting. And so this is INSG, right? I mean, do they have other data? Is it worth kind of going to their website and having a look? Can we get that?
Most of the stuff they do. I mean, they publish it. The data is fairly lagging. It's more, it's not necessarily the most current information. It's comprehensive. It's a great data sets to have. But it's mostly available only by subscription. There's actually very little data other than the monthly or quarterly balances that they do. But the subscription's not expensive. Again, if you want to do a deep dive into nickel, it's a good comprehensive source of information on everything that's nickel.
Okay. Well, thank goodness we've got you to tell us all about it. I see. You mentioned sort of research analysts and analysts just generally. They are getting an absolute kicking at the moment. I was doing a panel last night with sort of 4 mine builders. These guys have made hundreds of millions of bucks, if not billions, collectively for their shareholders over the past few years. You've got Integra Resources, Rio2. Minera Alamos, and Ore Finders, right? So great CEOs. And we kind of kept the session about, what's their advice to retail? What should we be looking at? What ratios, what data, what are the numbers, etc. And we've had these conversations as well over the past few weeks and months. And they basically just stay away from. If you want to know the truth, you've got to go and find the information yourself, because the research guys, because they're paid, because they're incentivized to write whatever the company wants, it makes it slightly harder to believe. So, to a man, I don't know if they'd all been drinking wine, but it's a bit early in the day, so maybe not. Yeah. But they were very honest about that aspect, and they sort of named a few names of newsletter writers who they believe were a bit more honest, i.e. subscription-based newsletter writers not paid for by the company. So, it's and you've been quite harsh and hard on analysts and their forecasting abilities for some time now.
Oh, on commodities, again, the issue there is not so much there's no one paying them because they're talking about the broader community, but again, it's basically, their self-incentive is to make sure to not to be too wrong to get fired. And the best way to be not too wrong is to not be too far away from whatever the median consensus is. So generally, most of the guys will drift one way or the other. And, the point I've made about nickel, why does nickel go through these super cycles from time to time? And again, it's a high growth metal, 4 to 5% a year. Most analysts don't put anywhere near that kind of growth forecast in place. Again, I won't mention names here, but there's one group or some groups that have, demand forecast at 3.5 million tons by 2030. And we're 2.5 million tons or so a year ago. We're going to add over, between 250, closer to 300,000 tons of nickel demand just this year. So we're going to be a third of the way to their target for the end of the decade, by the end of this year. And there's this EV thing happening that might, cause demand to continue to grow at high levels for a period of time. So it's frustrating when, they say, by 2030, maybe we won't need as much supply. But again, when my forecast is for at least 5 million tons by 2030, with the only thing holding that back is that we run out of metal sometime during the second half of that decade. So, it's just, it's shocking. And again, there's very few, if any, have anything close to a 10 to 15% demand growth forecast for this year. And again, the Q1 numbers were out. Now, one of the good guys put out a note last night who actually does do some work. Again, in this business, you can't be right all the time, but, he does get it right more often, than others. And we're basically now looking at a deficit in the first half of 2021. Nickel demand for the first quarter was 21% year over year, and remember, things did slow down in China, but for the first quarter, most of the first quarter and the rest of the world was still at a pretty good level. And it wasn't until until second quarter that things kind of fell off here. So, we're off to a tremendous, a tremendous pace. And, again, with US GDP growth at numbers like 6%, with the recovery coming as people get vaccinated and governments all lining up to, have stimulus, pumped into their economies. It's just very hard for me to see why demand won't be, for nickel up at the 15% end of the range. And again, at the upper end of the range for most of the commodities that, we're looking at. Iron ore hit a new all-time high a week ago. Again, there's the exchange traded, the sort of more LME commodities, and then there's the bulkier commodities. And again, in terms of looking for a trend, if you see the same thing happening in both the bulk commodities and the, LME commodities, then generally that's, pretty good support for, what's coming down the pipe.
So what's happening? We've talked in the past about production of briquettes, in the context of, squeeze on sulfate. So what's happening there?
Yeah, so that's the Q1 numbers helped explain some of what we saw back at the beginning of the quarter, where we saw sulfate premiums at the end of last year and in the first part of this year really start to explode. And again, what we saw is production of briquettes, which are again easy to dissolve. So in terms of the current path to produce sulfate for batteries, it's the preferred product to do that. And, for a number of reasons, again, we talked about Goro, but there were some other, production disruptions at some other refineries. And so, briquette production in the first quarter was, at the lowest point it had been since 2012. So, that's, a big chunk of supply out of the market, and what was, was fascinating there was not only did you see, massive imports of various materials is, again, 3 months ago, 2021, and even, for me, I was not bullish on this first half of 2021 because we were supposed to see a big increase in nickel pig iron production from Indonesia. It has happened, but we're seeing demand growth, again, beyond the 15% kind of growth, that I was talking about. So, what you see are, so sulfate imports, are up, 10x versus where they were, versus where they were a year ago, and on becoming a meaningful portion of overall demand. You're seeing stainless steel imports double where they were a year ago, and again, this is during a point in time, where these things were supposed to be, squeezed out of the market because between Indonesia and China, there's going to be so much nickel, in those two markets, that the call on nickel units from the rest of the world was going to drop. And in fact, we've seen the polar opposite happen there. So, it's been a very, very interesting start to the year. And I think, in terms of, key question now is we're back up at 8, is it sustainable from here? And I think, on the back of these numbers, and then as well, the things I always try and say is, look at stainless steel prices in various markets. And, again, as these nickel prices moving higher this week, you saw the Taiwanese stainless steel producers bump up for their prices to May. The other point I always talk about is look at product premiums. You're seeing sulfate premiums, move higher again this week in China after the big Qingshan sell-off about, at the end of February. So, I think, those kind of pointers suggest to me that, we are now out of this range, the 750 cap. And we'll start to settle in at this range with the risk being upside from here. The other great data point in terms of where we go is, Q1, we're far enough that we've got the full quarter global EV sales. They're up 165% year over year. Again, China was impacted with COVID, but for the rest of the world, really hadn't been at that point. So those are massive numbers in terms of growth rates.
Absolutely huge. So I just want to get a number from you because I'm not quite sure I heard it earlier. You're talking about forecasters predicting 3.5 million tons per annum by the end of the decade. You're obviously saying we're going to achieve a third of that by the end of this year alone. So what's your 2030 number?
5 million tons.
5 million tons. Right.
Yeah, which is simply 4% growth plus some metal for the EV market.
So nothing crazy, and we don't have enough nickel mines today to get even close to that. So I know you've got a big project. How on earth are we going to find more nickel to feed that kind of latent demand?
Yeah, no, it's these, again, it's large, low grade deposits like ours that can be expanded multiple times. They'll be one of the key sources to be able to help fill that gap. Because again, we will be starting out fairly large and ramping up to probably 100,000 tons of the day ore process, which would make us producing in the range of 40,000 tons of nickel plus, which would make us one of the largest sulfide mines in the world globally. We've got room to expand beyond that as we to expand the resource that's there. But it's going to be key mines like ours, and there's only a handful of others globally that are at any stage of development and have that scale that are going to be there to help fill in that gap. Again, I'm not afraid of Indonesia. We're going to need at least 1.5 million, of that 2.5 million tons, at least 1.5 to 2 million of that nickel to be able to be in a place to get all that nickel. 1.5 million to 2 million, extra tons has to come from Indonesia versus where it was producing, a year and a bit ago. So, the first million's on its way. They need to get another 500,000, 1 million in the pipeline to give us a shot to get there. And again, that what happened in the first quarter of this year is a lot of the existing producers, again, with struggled, and didn't, came short of their, production goals for the coming year. Because again, we've got a lot of tired old assets that have not been invested in for a very, very long time.
With these kind of big headline numbers on the macro front, and prices moving, and there's momentum is there for sure, and even lazy researchers and analysts are understanding that the need better in terms of the EV thematic and the numbers that it's driving. But it's got to be a much easier environment for companies to get funded, I suspect, going forward. We're doing just a quick segue and a bit of promote. We're doing a little session on the 19th and 20th with MetSoc on how to understand what good and bad looks like. Because my concern as an investor is that once these momentum plays get going, all sorts of crap just comes in the market, right? We've talked about it in the past. And that's why we're doing that session, because you can make money in different ways, but I'm actually want to talk to you today about how do we in the world find back and actually physically produce into this marketplace. Because if we can't, or we're going to have to alter battery design, or we're going to have to alter the way that we deliver these EVs. If we can't, so how are we going to do it? Is there some sort of, is it going to be the big boys, or is it going to be guys like you finding it for the big boys? I mean, what's the makeup of the market going to look like going forward? Yeah, no,
I think it'll be, partly the big boys. I mean, one of the big news this week was Vale looking to spin out their battery metals business. The reality is, the old Inco assets were one of the largest sort of sulfide resources, globally, and Vale's, been focused on their iron ore business and been dealing with tailings dam failures and stuff. So they've been a little distracted and really have not invested significantly to expand production. They've been shrinking, and the money they're spending is just helping them shrink less than they otherwise would. So, and again, for a lot of the majors, nickel isn't a big enough part of their business to be a focus for growth now. BHP Billiton setting up their nickel office in Toronto. Again, I think they're spending this year getting their head around what they're going to do. And I know from conversations, it was at 1-to-1 Americas this week, and a bunch of there were several large mid-tiers, minor majors who had corporate development people there. And again, they're very, they are really ramping up in terms of, we want to figure out how to have a lower carbon portfolio, get more exposure to the battery metal sector. And so that shift in thinking is really happening. And my view is by the end of this year, with the, strategy sessions for the end of the year for the plans for 2022 and forward, you're going to see an even bigger shift in that direction, which will be great for us, because, you will start to see the majors and mid-tiers get very involved with, earlier stage stories like ours. And, again, we're in the very fortunate position because we're pushing so aggressively that, we're one of the few projects that has got a shot at getting into production by the middle part of this decade, when things should get very, very interesting from a nickel market perspective. Yeah, it's definitely getting interesting, but you've kind of helped me get to where I wanted to get to with, Vale offloading, and even the BHP taking a while to kind of wrap their head around it. And the reason they're taking a while to wrap their head around it is because nickel can create huge wealth. It can also destroy a lot of value too, because of the various cycles and so forth. So even the big guys are slightly nervous. And is that to your advantage? I'm talking about the smaller guys' advantage. Oh, for sure. Because, again, the island of New Caledonia, between, what's happened to Goro over the last 15 years and what's happened, Koniambo has literally seen, major mining companies basically vaporize about $25 billion worth of capital that's been invested into that country. And so those, and again, there are some other $5 to $10 billion HPAL failures around the world. So, that's making them a little more cautious in terms of, okay, how are we going to get into this business? And so, for those of us who've got more straightforward sulfide projects, that use existing technology and are in safe jurisdictions, it ticks a lot of boxes for them. But again, these guys, as much as they like to think they're nimble and looking at it, they have planning years and planning cycles that they need to get through. And so last year was deciding that we want to get more exposure in nickel and battery metals this year is about finding, figuring out how we want to get involved. And I think 2022 is going to be, that's where you're going to see the majors really start to deploy more capital and get more heavily involved, in the nickel exploration, nickel development sector.
Interesting. Well, it's been, again, interesting to see how they come at it. And I can't help but wonder if there's a roll-up exercise part of that, their solution, you come slightly late to the party, but have it de-risked for them, or do we see more destruction of billions of dollars of value? We shall see. Just on the price though, the price is really, I look back 12 months. Wow. Amazing, right? Not sure too many people could have called it like that. Is it sustainable though? What are the factors which could affect this kind of growth that we're seeing at the moment?
Yeah, no, it's really again, coming down to three factors. Is going to be stainless steel demand growth. It's going to be EV growth. And then, just how much supply comes out of Indonesia this year. So, we are going to see a substantial amount of supply growth come out of Indonesia. That is definitely happening. But again, with the kind of growth rates we're seeing in EVs, and again, I can't see a reason why that would slow down between now and year end. If anything, it's just going to continue to accelerate even more so as we come out of as COVID starts to wind down and all the stimulus comes into the economies. And again, stainless steel demand, all this talk of infrastructure spending and building back better, stainless steel gets used in a wide range of building back better type applications. So again, I find it hard to believe that, stainless steel demand is somehow just going to level out for the balance of the year. And is more just going to continue to accelerate as the year goes. So, I saw 2021 as we were going to see a lot of supply from Indonesia, but we're also going to see a lot of demand growth, to soak up all of that extra supply. And then as we got into year end, we were going to start to see, these demand trends, underpinned by EVs on top of stainless, you're going to keep going even further. And maybe, this next wave of supply from Indonesia is not going to be quite as large as what we're going to see this year. And, you're going to start to see some pretty chunky deficits emerge, once people start to use some realistic demand forecasts for the next few years going forward.
Interesting. We said we wouldn't talk about companies, but we've got to talk about this one because finally a bit of good news for Polymat this week, right?
Yeah, so it's primarily copper, but a little bit of nickel. Again, it's sort of a good, it's a good data point in terms of the U.S. permitting process, which is going to be one of the key questions in terms of how does the Biden administration wrestle with, we want more strategic metals. We want to decouple our supply chains from China, but we're going to have to permit a lot more mining, which again, has not necessarily always been a part of the Democratic Party agenda in the United States. So it was good. So the Supreme Court of Minnesota held up the permit that had been granted, but they also supported the reason for the Court of Appeals to reject it, basically pull it back from them. So they've sent it back, said you need to put a time deadline on it and a couple other things that can be met. So it's good. It looks like they will get their permit, but they still have to go through one more set of steps on the permit for their tailings facility. But it is moving forward. So, fingers crossed that it keeps moving forward. And again, these projects that are in the late stages of permitting, keep an eye on them, as you're looking at other U.S. investments to see sort of what's coming down the pipe. The political risk this week was the Philippines government announced they're going to do some inspections of mines around the country, including an area that was a nickel producer that was sort of this autonomous region in a more where you've had Islamic terrorists operating. So they kind of left it alone for a while, but they do want to go inspect these locations as well. So again, the Philippines opened up mining again. They announced about 2 weeks ago that they're going to have new mining permits going. But these inspections in the fall, it does really create a supply risk because again, a lot of times, more corrupt governments use these kind of inspections as a way to maybe, help some of their more favored friends and punish some of their less favored friends in terms of, who gets what. So, we'll see how that plays out in the fourth quarter of next year. As always, Mr. Duterte is keeping things interesting.
Very, very colorful, very interesting. But in terms of what he's doing, it's not unusual in the region as a whole. So, yeah. Anyway, there we go, folks. That's macro from the front row. Mark, appreciate it. That's nice little romp through. Next week, we're going to talk about some companies and see what's happening out there. And we're going to keep advertising this nickel couple of days. We're going to do what, three hours on
2 3-hour sessions on the 19th and the 20th. Yeah. So
some good names. And it's about how do you make money? It's how do you make money, guys? How do you spot good? How do you spot bad?
Avoid the landmines and hopefully, pick out the big winners. So
that's what we're going to do. Fantastic. Okay. Looking forward to that. We'll start marketing and advertising that, letting people know as and when. So we're going to pre-record a bunch of it, make our lives a bit easier, but live Q&A on both days. Ask anything you want, send questions in earlier, no problem. We'll pick those up.
We left lots of time specifically, for that, to have that discussion. Because again, it's about, arming people with, the ability to act, have 8 or 10 kind of key criteria in terms of what makes a good investment versus, a good investment versus a bad investment, and the key kind of technical things that people should be thinking about. So,
well, what I thought was quite funny was we've got some guys who are coming on and doing some of these talks who educate fund managers, analysts, and institutional investors broadly. So it's very, very clever people. We know that because they told us they were. And and our guys have said, we've had to continually dumb it down for them because we've got very good at dumbing it down and making it understandable and accessible for those guys. And I hope everyone who joins in on those 2 sessions will also find it equally accessible. And actually, actionable. The key thing is actionable. It'll stay with you. So
and that actionable theme is definitely sort of the key thing that we're pushing through each of the presentations. So.
Yeah, and what I meant was funny. It was like, I think the reaction from your guys, the MetSoc guys and others, saying they didn't realize how little the analysts knew. That was the good bit. There you go.
Yeah.
There you go. Brilliant. What are you up to? Friday, weekend?
Friday.
What's happening?
Another weekend in lockdown paradise. Not able to get a chance to do too much. Maybe going to go for some very excellent walks outside. So
okay. It's not bad. Aiming low, I have to say.
Yes.
Is that what it comes to? Just aim low.
Yeah.
Don't try and overachieve because you'll just disappoint.
Yeah. Maybe I'll bump into someone I know and talk to them 6 feet away, which will be very exciting. So.
How awesome for you! I love the thought of that. I think I've got one of the kids' birthdays this weekend.
Oh, nice.
Yeah. So trying to keep
that sounds good.
Level-headed.
But you get to have a birthday party now in the UK, right? You can actually have a few people over, or have
I think
people outdoors together.
We can have 2 families outdoors. Do that.
Okay.
Thing, right.
Yeah.
Over a fence or something. So we're doing that thing.
Okay.
And that'll be fun. I think the weather's going to be quite nice. The pool may get cranked up. Might have to turn the temperature up. That's how good this weekend's going to be. It was really unusual for this time of year. Barbecue. See what's happening?
No. Nice. 14 degrees this weekend in Toronto. So no swimming yet.
No swimming yet. Bit hard. Yeah. Okay. Well, Mike, I appreciate today as always. Fantastic. Loved it. See you next week. Have a great weekend.
All right. You too, sir. Take care.